Welcome back. I'm Pratap here. Today is 4th September 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. So yesterday we identified 3 high liquidity zones and we got 2 trades, one successful trade and one is stopped out. So before we discuss, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on this post. Some of you might see a tab community. Whichever you see, you click on that and then you can able to find this post. This post is having a YouTube playlist link that will take you to all the training videos. Just click on this playlist link. Now we are into the playlist Supply Demand Zone Price Action course. So far we have completed 24 training lessons. From these 24 training lessons we have released 62 training videos. And you need to start from lesson 1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1. All the training lessons are available in an order. So please go through all these lessons in the order, one by one, and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from the video description, please join at our Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other important updates we will provide at our Telegram channel. Now let's get into the performance evaluation of the high liquidity zones. Yesterday we identified 3 high liquidity zones and the first one is Indian hotels. It is a daily high liquidity demand zone, rally base rally. This is what our software identified as a high liquidity zone. So I have fine tuned this zone with 75 minutes time frame. Here I identified 2 75-minute zones. One is the drop, 4 base candles and a rally, and another one is the drop, 3 base candles and a rally candle. These are the 2 high liquidity, but this is a LOTL scenario. Okay, this 75-minute zone again I fine tuned with 15 minutes time frame. In the bottom I didn't find any proper 15-minute zone. Here it looks like a drop base, but this is again a drop candle. Drop base drop, there is no pattern available. It's an invalid pattern. We need to have drop base rally. So that's why we can't fine tune the zone here in this area. Maybe there could be some lower time frame zones. That is a different story. But there is no fine tuned 15-minute zone. But within this area, we have a fine tuned 15-minute zone. We have a rally, 2 base candles and a rally candle. Rally, base, rally. This is the 15-minute zone. And also I have fine tuned one more zone also here without any 15-minute zone. The 5-minute zone already we have identified. Why we identified this 5-minute zone? Probably this supports the aggressive trade setup. That we will see once we look into 5 minutes time frame. Okay, this is the valid rally base rally is the valid 5-minute zone having confluence with this 75-minute zone. Now again let me fine tune with 5 minutes time frame. So within this 15-minute zone, here we have a drop, 3 base candles and a rally candle. Drop, base, rally. Actually we have to draw the zone like this. But I have fine tuned to the type 3 proximal. The reason is it will be inlined with this daily high liquidity zone. I have fine tuned in such a way exactly in the daily zone we can take. Maybe you can keep some buffer before this entry buffer, but this is the area actually just to mark our order flow is exactly within high liquidity. But actually you can also plan like this. You can also plan like this. Or to more close to the high liquidity, you can also plan like this. It's up to you. And this is I'm just drawing in line with, so that it is in line with the daily high liquidity zone, the order flow. But strictly speaking, This is how you can plan. Or here. Either one is valid. But here again you see we have a drop, base, rally is there. See, came very close to this and again moved up. So in this area, this is a clue. The rejections away from this zone. Prices are moving away from this zone before reaching. Probably this could be a high liquidity area. I mean, need not be high liquidity. The reason why I am saying high liquidity, see here in this candle, just before reaching it moved up. Again here, before reaching it moved up. Probably a lot of liquidity might be there, strong order flow might be there. So that's why, but you can plan as an aggressive trade only. Aggressive trade with price action close, rejections are prices moving away from the zone. If this zone is violated, we can plan a trade here, but we didn't get any violation from this zone. See here, today morning candle. This is not exactly 9:15 candle. This is 9:17 candle. Let me go to the one minute. Because 9:15, there are higher chances that the zone will be missing. So this is the first 9:15 candle. After that, 9:16 and again 9:17. You got a clear trade from this zone. Even if you draw this zone in line with the daily, how I marked initially like this. If it is in line with the daily time frame, still you get a trade with a small buffer, just 15 paisa buffer. Generally we keep up to 0.1, if not up to 0.1, 0.5%, some people may keep risk management, but still it will execute. This trade will execute. And after that, what about the target? Target is the 15-minute zone. So here you have a rally base drop, and follow through candle, and again with the gap down, another drop candle with hidden body. And we got the trade, and finally it reached the target, and this zone is violated. When it reached the target, exactly at 15:03. Afternoon 15:03, it reached the target. But some of you may exit a little before. That possibility is there. Why you may exit a little before? The reason is, let me tell you. Let me go to the 15 minutes. Here you have a gap. A lot of gap is there. So somewhere here the prices may turn down. So that's why who don't want to take a huge risk? Who wants to take the safe trade? Always remember trailing stop loss. The 1 minute trailing stop loss is a good mechanism. In case if anybody implemented trailing stop loss, where you would have exited, let me tell you. Okay, today it has given opportunity up to 15 minutes supply zone. Providing the opportunity is different. Actual human psychology is different. This is what you have to understand. This is the high liquidity zone provided opportunity till this 15-minute zone. But we may not carry our trade till the 15-minute zone. You may exit before. Some of you may exit here. Some of you may exit here. Some of you may exit at 1:3 RR. Some of you may exit at 1:5 RR. Some of you may patiently they will wait till the last minute of the trading session. You would have exited here. Out of all these things, the safest mechanism is maybe trailing stop loss is one opportunity. The 1 minute trailing. In case if you would have used 1 minute trailing stop loss, probably this is a rally based, but this is at the early stage of the trade. So that is the reason why here maybe this is one opportunity, drop base rally, and next one is a drop 3 base candles and rally. This is also another possibility. Some of you might have exited, if this is violated, you might have exited below this. What is a trailing stop loss? I already explained in lesson 18 or 19. One of these lessons I explained in detail. If this zone is violated, you will exit. If after this price action, if a new zone is created, probably you would have adjusted your trailing stop loss. See here, again a new zone, rally, 3 base candles and a rally. Probably this could be your new 1 minute demand zone. At the time what you do, you will delete this. If price violate this zone, then you will exit. Here also rally base rally like that it is there, but it is not a valid one because this picked up the order. Even if you draw, it is LOTL. Because it is LOTL, ultimately you have to exit. But see here how many times it picked up the orders. This is the first time and again moved up. Second time again moved up. Third time again moved up. Finally further moved and again it created another drop base rally. See this? Drop base rally. This is another 5 minute zone. Sorry, 1 minute zone, another 1 minute zone. So now what you do, you will delete this 1 minute demand zone, and now this is going to be your new 1 minute zone. See, now it is holding the prices. Every candle, some kind of sluggish nature is also we have seen. If that is the case, some of you will exit somewhere here, or some will patiently wait till this is violated, because there is a possibility prices again further move up. It will reach this target, actual target, 15 minutes target. Maybe some here in this candle it is violated, maybe some of you might have exited here, somewhere here. Because here your trailing stop loss is hit. See, after that it looks like prices were going down, again picked up the orders and again recovered and moving up. Lot of time prices stayed in this area and again came down. See, finally at the end of the market at 3 o'clock it reached the 15 minutes. But do we really have patience to wait? No. Because this price action will always tell our minds, you have to exit, you have to exit. That is what our mind will be keep on instructing. But still it is a good profit. It's a very, very good profit. Actually till 15 minute zone, how much opportunity it has given? Indian Hotels has given 9,800 rupees profit. We got 7.4% ROI we got till this 15 minute zone. If you would have exited here, probably you might have got some around maybe 8,000 rupees or 7,500 or 8,000 rupees profit you would have got instead of 9,000. How much? Instead of 9,800. Maybe 8,500 rupees profit you would have got. Maybe instead of 7.4% ROI, maybe you would have got maybe a 6.2 or 6.3% ROI you would have got. Even till this, even if you would have followed 1 minute trailing stop loss. See what I am calculating, what is the maximum opportunity our high liquidity zone has given during that intraday. I will be registering in my Excel sheet, because that is how we need to check the power of high liquidity. But where we exited is up to our human psychology, how our mind is instructing us during the live trading. Because as I told you earlier, some people, once it reach 1:3 RR, they exit. Some people, once it reach 1:4 RR, they exit. Some people, they take trades based on 1 minute trailing stop loss. Probably they would have exited here. These are all the different strategies and techniques. And those who waited till the last minute of the trading hours, probably they would have exited and grabbed the maximum. But it is a test to their patience. The rest of the price action from here to here is a testing period for their patience. And their patience would have resulted a good profit. But at the same time, how much time they lost here, that is also important. If you would have exited your trade here, maybe you would have invested that money in some other stock. Need not be high liquidity zone, but some other stock, some bullish trade setups or bearish trade setups, or we have intraday trades, hourly income trade, intraday trades also I am providing in our reports. There you would have invested in one of those bullish or bearish trade setups, depending on the movement of the overall market. Okay. But Indian Hotels is a very good example to understand the trailing stop loss, and also a very good example how our patience will result good returns. So this is about Indian Hotel. Next one is TCS. TCS is a 75 minutes high liquidity zone. Here we have a leg-in candle. We have 1, 2, 3, 4 base candles and a rally candle, leg out. This is how our software identified. And what I did, I fine-tuned this zone with 15 minutes time frame. Here we have a 15-minute zone. We have a drop candle, we have a rally candle, 4 base candles and a rally candle. This is the 15-minute zone. And previously prices tested this 15-minute zone twice previously. But here we identified a fine-tuned 5-minute zone. Let me go to the 5 minutes time frame. Here we have a drop base rally. Earlier this zone was tested, but type 1 was tested, type 1 proximal. Because many times type 2 also will give us successful trades, many times. And moreover, see the movement, the rejection price moved away from the zone just before this price reaching this area. But anyway, this is a 915 candle. Sometimes freak trades might be there. Maybe a false trade, maybe just 1 or 2 trades. Because of that, the whole candle is filled. That possibility is also there. That's why always a 915, exact 915, 1 minute candle is a very dangerous candle. Many times we don't take trades. And many times because of those freak trades, our trades won't be executed. And many traders, they trade from 916 candle onwards. They ignore 915. That is also there. But some people trade even 915 also. Some people place pre-orders and then they take the trade. These are all the different. But keeping pre-market orders is possible only in cash segment, not in the F&O. See, today what happened? The zone is violated. But definitely your trade might not have been executed in TCS. See, we have to register the zone is violated. So I have registered this trade in our Excel sheet. But practically, those who are trading in F&O, definitely your trade would not have been executed because 915 candle, the zone is violated. Let me shift to 1 minute time frame. You will understand what happened in the 915 candle. See here, this is the 915 candle. Where it opened and where it closed. Everything happened. That means this entire zone is violated during 915 candle. Those who don't trade in 915, those whose trades doesn't execute even if you click at 915, you might have been saved. But still, some of your trades might have been executed. Your stop loss is hit. You would have exited. You would have got some loss. So how much? We got 998 rupees loss as per one futures lot. Calculating as per one futures lot. And as per one future margin cost, the ROI, negative ROI, we got 0.7%. Because mostly we take our risk up to. I'm not saying up, you have to take, but you can take up to 2%. Beyond 2%, you can't accept the risk. So within the risk management, so you got 0.7. Whoever trades are executed at morning 915 candle, you would have got this much loss. But others, those who don't trade at 915, you won't place our trade at all because this zone is already pierced. Once a zone is violated, you can't plan any trades in this zone. It is no more a valid zone. Whether it is violated or whether it is pierced, no more it is a valid zone. Because all the order flow is gone in this zone. So after that TCS, what happened? It was moving here for some time and after that again moved up some extent. But anyway, it is stopped out. TCS is a stopped out trade. So out of these two trades, one is a successful, one is a stopped out. And the next IOC. IOC is also a 75-minute zone. It is a rally candle, 6 base candles, 1, 2, 3, 4, 5, 6, and again a rally candle. This is the IOC. This 75-minute zone is fine-tuned with 15-minute zone. Here we have a 15-minute zone. We have a leg candle rally, base, and medium size candle also part of the base, and then a rally candle, follow through candles. So within this 15 minutes area, again I fine tuned with 5 minutes time frame. So we have a rally candle, 2 base candles, and again a rally candle, ERC candle. This is the fine tuned 5 minute zone. And this fine tuned 5 minute zone is already tested. Because it is already tested, this zone is no more a valid zone for planning our trade. Unless institutions decide to create a new zone and again push, except the scenario, there are higher chances that this zone will be violated. But anyway, today prices did not enter into this zone, and also we didn't plan any trade in this zone because the fine-tuned 5 minute zone is already tested. So this is about IOC. Hope this information will be useful to you. Let's all meet again in our next video.